So is there going to be follow-through today, unlike what we've seen over the last so many days? That's the question. Or is it going to be a middling kind of session and the market moves right back up? The Nifty, the Bank Nifty is down about 50 points. So 13 points lower on the Nifty. Bank Nifty down about 50 points to begin the first rates. But more with Sonia on the wall. Sonia.
Well, thanks for that. So I'm going to start, since you spoke about the Bank Nifty, I'm going to start straight with SBI, which is the stock that was at a record high for the last few days. Let's take a look at SBI. There's some more gains being piled on there. As we were telling you, there was large delivery-based buying of over 2,200 crores in SBI. Tata Power next up. It's at a 52-week high and it's in focus today ahead of its earnings that come out later in the day. So keep an eye out on that. Talking about earnings, Hero MotoCorp expected to have a very strong set of numbers this time around. And ahead of earnings, Hero MotoCorp is up almost about 0.5%. Let's look at some result reactions. LIC is clearly your stock of the day, of the moment actually. 5.5% higher, post a very strong set of numbers. The total APE for LIC is up 7%. That's annual premium equivalent. But also the value of the new business for LIC is up 46%. Moving on to Zomato, there you have it. Brokerages have upgraded the numbers post the earnings, and hence Zomato is up 3.5%. Apart from that, Escorts, let's take a look at how that one's performing. 4% knockdown on Escorts after the company has cut guidance for the industry to a negative growth. They're expecting the industry to fall in FY24 by the end because of weakness in the sector. BHEL is the other one that I'm looking at. The company has bagged orders worth 5,500 crores from Haryana Power Generation Corporation. Some more numbers and earnings reaction. JK Lakshmi Cement, EBITDA per ton has risen to almost 1,027 versus 690 earlier. So very good set of numbers. And as you can see, the stock is reflective of that, 6.5% higher. Some other corporate news. Biocon is down 1% after the CFO Indranil Sen has resigned. The generics business is under pressure as well. United Breweries is up 3.5% after good EBITDA growth. Margins at 8%, so doubled compared to what we've seen last year. And RT Industries, EBITDA is up by 15%. Revenue has risen 20% quarter on quarter. So all in all, you'd have to say that the market, the Nifty, just flatlining right now. Little bit of pressure on the Nifty bank, down about 90%. But otherwise, it's all stock-specific action. Back to you.
All right. Well, the Nifty is gone, I think, and just about to breach the 20 DMA mark as we speak. In terms of other stocks that are moving around, you have Ramco Cements. Well, those numbers were a little bit of a miss on the EBITDA front. They've also announced capex. They're already sitting on a debt of around 5,000 crores. So put all those factors together, the stock is down close to around 8%, though the street was anticipating a weakish set of numbers. You have Torrent Power as well, that's down close to around 5.5%. And PFC and REC, both of them taking it on the chin now. Both of them down between 3 to around 4% as we speak. What's doing well? It's time for a beer. United Breweries still holding with gains of around 2.5% as we speak. But the markets quickly have swung from a positive 30-40 points to a negative 45 points as we speak.
Well, more like it, I would say, but let's just see if it holds or if it kind of, goes into a flattish kind of terrain again. This is early days. So, Zomato is the top volume traded gainer across the board. So this is up 3.5% at 149 plus. LIC comes up with another 4%. This is just not LIC. Look at LIC, New India Assurance, both are up 4% a pop. And I think GICRE maybe will not participate because the numbers were pretty poor. From GICRE, and I think there's a downgrade from GIC as well from Spark Vendors. So they've brought their rating and target down to about $400 after the run-up we've seen. Yes Bank, that big star over the last 4 or 5 days, 2.5 higher, big volumes. Olectra, the bus maker, the electric bus maker, 5% higher on that one, just under 2,000 rupees on Olectra. JP Power has been doing well for the last, for a while actually. It's up 25% in the month of February itself. So that's done very well. It's up 60% this year already. And I think JP Power found a mention on Nimesh's D Street chatter list yesterday as well. JK Lakshmi, I think Nigel mentioned, 7% higher. It's a big pop, 976. Parag Milk is up 5%. Coming up with, numbers were strong and they came while markets were trading yesterday. 264 on Parag Milk. Schneider is up 15%. Schneider is, rallying to about 634. And there is Orchid Pharma, which is up 10%. Stocks at about 970 as we get the first rates right now. Shilpa Medicare, another one, 2% higher. Another name which was on the D Street list a couple of days back. Newland Laboratories is up 5%. I think we did mention that earlier. So it's once again, nothing on the Nifty with a 25-point cut, but it's a vibrant start as far as individual stocks, etc. go. Paytm is down 5%. It's after yesterday's 10% pop, 420. REC and PFC, I think, are cooling off a little bit. And as Sonia mentioned, Escorts, of course, is the big cut. Is down about 6% now. The cash price is down 6%, and I think futures are down maybe a little bit more right now. AstraZeneca, I'm not sure if there are numbers or something, but 13% down on AstraZeneca. The stock's at about 5,700. So, more movers as we go along. But Manish Santalia is with us now. He's CIO in MK Investment Managers. Manish, good to have you with us here. Thanks very much for your time. Just a quick assessment of earnings so far, Manish, for the third quarter. More downgrades than upgrades, more upgrades than downgrades, or it's pretty much in line and nothing much. What's your sense?
Prashant, I think the numbers have come bang in line. Broadly, you see the sectors that have led the earnings growth is your banks, your automobiles, and oil and gas. Now, apart from this, I think broadly FY25 and FY26 numbers FY25 would broadly see a 1 to 2% cut. FY26 would be broadly in line with what the preview numbers were like. So I think there's not too much of a disappointment. Of course, on the private sector banks, it's very difficult to understand the level of derating that this space is undergoing. And that's probably a drag on the overall Nifty as well, the Nifty 50 and the Sensex. But, individual sectors, I don't think too much of a downgrade in any of the major sectoral earnings post the earnings season. It was the fag end of the earnings season now.
Okay, well, no major downgrades coming in. By the way, early signs of some profit taking in the PSU space. I don't know if this is actually going to take place, but look at names like IRDA, down almost about 5% odd. You have oil marketing companies down about 2.5%. Very, very early signs of, some money being taken off the table in this space. Something like an NHPC, etc., down almost 1.5–2%. Manish, thanks for joining in. I wanted your thoughts on, the PSU banks particularly, because, SBI sitting at a fresh record high. So, from a portfolio standpoint, how do you look at it now? What's the best way to approach it?
I think there's some deep value in the public sector banks, and now that the valuations of the private sector banks also seem to be correcting quite a bit, I would believe that once liquidity conditions ease out, you would have a better handle on the cost of funds as far as the PSU banking space is also concerned. Of course, one has to deal with tier 1 capital because most of them would be coming in to raise capital. So PSU banks where there is a scope of growth without having to dilute, would be the ones that would be more suited. Those who have already raised the capital, they would be the ones to really look out. And those who have a stable liability franchise, that is the CASA ratio. So guys who are having actually good CASA ratios and a decent handle on cost of funds would be the ones to go. But I think the preferred bet would be the PSU banks, because you really don't know when the private sector banks derating would stop. I mean, it's just mind-boggling as to earnings growth, coming about, but the valuation derating just happens every day. So from that point of view, I think margin of safety still appears to be in the PSU banking space.
Okay, all right. Hi, Manish. Good morning. Since we're talking about PSU as well as private banks, let's talk about the insurance companies as well. Suddenly, those companies have made a good comeback, including LIC. Your view on that space?
Well, LIC was quite undervalued, and they reported some blockbuster numbers as well. And the entire PSU bank as a whole, and the LIC and the insurance companies as a whole, whether it be the health insurance companies or the life insurance companies, underperforming for quite some time as a pack due to multiple reasons, due to higher provisions on account of claims or combined ratio actually not coming in line with expectations. But now that is behind us. There has been some increase in tariffs as well, and I think the growth would broadly come about for the entire space. And within that peak, the PSU ones were the really hated names, so to speak, and offered deep value. I think that is now correcting, and that is what we are seeing in the marketplace.
Manish, so just I know you don't want to talk about individual stocks, right? But have to just get your thought process. One is Paytm. There was a large kind of a setback which the company suffered. As an institutional money manager, what do? I mean, if you own it, do you write it out? Yeah.
So I'll give you a generic answer on this. See, platformized business are the way to go. Now, whether it be the food technology space or whether it be the financial services space, so on and so forth, there's non-linearity that's going to happen across the board. Ed tech, beauty tech, or, consumer tech, and so on. So platformized business, there's no major problem. But I think regulatory, checks and balances would need to be adhered to. And of course, that is an area where individual investors would really have to do their research as to, the companies which are actually, adhering to the regulatory issues, or whether there's been some, breach, etc. But otherwise, I think platformized businesses will have non-linearity going forward.
Okay. Any place or any space that you would be cautious of right now? Because, this market has defied all forms of wisdom, right, over the last couple of years. Everything that didn't work for the last 10 years is working now, whether it's defense, whether it's PSUs, whether it's railway stocks. So is there any place that you're cautious on right now where you feel like, okay, if you've made money here, perhaps the time has come to, take money off the table?
See, India is in a bullish phase. All sectors and, individual stocks would likely do well, but you got to find value. I mean, it's not growth at any price. That really won't work. So I think what the markets are really telling you is that some of the spaces exhibited growth, but because of the nature and texture of some of these companies, public or public sector or thereabouts, they were quite an ignored lot. And, now that's correct. So I think one of the spaces where there's still some disappointment, and primarily post the budget, was that, the FRBM got enhanced to 5.2%. Of course, there was little money in the liquidity is tight. So the consumer staple space, I mean, we thought that before the elections, there would be some relief in the hands of consumers. But I guess that would have to wait post the election results and, once the final budget comes through. But I think the infrastructure spending side, I mean, we are all gung-ho on that side, but one has to find value, where there is value vis-a-vis the price that is being exhibited on the screen.
Okay. All right. Manish, we'll leave it at that. Thanks a lot for joining in. Appreciate your time here. That's Manish Santalia of MK Investment Managers. But let's talk about Manappuram Finance now. Their Q3 net interest margins have surged to a 10-quarter high. The company has a solid non-gold portfolio and is also diversifying into the non-gold space. Their asset quality, though, has deteriorated. VP Nandakumar, the MD and CEO of the company, joins us now to talk about that. Mr. Nandakumar, thank you for being with us on the channel. Always good speaking to you. I want to first start by asking you about the net interest margins, which have been quite strong this time. It's the highest that we've seen in the last 10 quarters. But the company is also diversifying away from the gold portfolio gradually. So tell us a little bit about what the margin performance could look like. Can you build on to these levels further? And over the next 12 to 18 months, what are we looking at?
So we hope the margins could be maintained because we are short-term lenders, even though we lend for 1 year. The usual nature of the customers is to avail for 2-3 months. The average life is around 3 months. And the average ticket in gold loan also remains around 50,000. So we hope to maintain the net interest margin at this level.
Okay, so you hope to maintain your net interest margin at this level. The reason I asked is because RBI has tightened norms, right, across the board for consumer lending, etc. Do you think that would in any way affect your margins?
No, we are falling within our norms. Our board is always conscious about to work within the norm, and board take a decision based on that only, always.
Mr. Nandakumar, hi, good morning. Prashant here. So, could you talk to us about, the gold loan book, where on a quarter-on-quarter basis, growth was kind of flat. This despite the fact that gold prices went up, 5% plus in the quarter. Usually we see a bump up in the advances as well. Will we see that in the coming quarters? What happened?
So year on year, if you take the gold loan has grown around 11%. Quarter to quarter flat, because some seasons it used to be like that. Gold demand used to be seasonal, and gold price has not much relevance, even though it is but it will not affect beyond a certain point, because the requirement for money is more important, because these people will have to redeem, and they used to redeem. In the ordinary course of business, around more than 95%, 96% gets redeemed in the usual course. So that means, within 3 months, they have to find out the cash flow. So they are very conscious about borrowing a higher sum based on the price. So it may not have much impact.
Okay, all right. Hi, good morning, Mr. Nandakumar. When you joined us the last time, you told us the ideal mix will be 50% each, gold as well as non-gold. You're almost there. It's come down to around 51.5% approximately. What about growth for the year? I think on gold, you were guiding for around 7 to 8%. And on the overall book, you were guiding for around 20% for FY24. Hold on to that?
We hold on to that. We expect a reasonable growth during the last quarter. We used to get our last quarter always used to be good for gold one.
Got it. All right. So just one more question, before we get back to your operational performance. There have been some rumors that possibly, there could be some bit of a buyout news on Manappuram Finance. You want to clarify on that? Is it on the block? Is there anyone who you're talking to?
No, it is absolutely nonsense. It is completely a false news.
Got it, sir. We need to clear out everything for our viewers, so that's why I just needed to ask you on that front as well.
Thank you.
And thank you for that clarification as well. I just want to understand a little more of what's happening in the rural and semi-urban market, Mr. Nandakumar, because, certain pockets like farm equipment, for example, that entire agri segment has been under a lot of pressure. I'm sure there's some spillover impact into your industry as well. Do you think that there could be some more pain before things improve?
Our finance to farm equipments is low. Our car loan portfolio, commercial vehicle portfolio, these are doing well. We have only a very small portion of the farm equipments. And that for us, that did not pose any much challenge in the asset quality.
No, that was just an example that I was giving you, that some of these rural industries are under pressure, but you're saying that you're not seeing any pain as a lender in rural or semi-urban markets?
We don't see any unusual pressure there. Maybe because our portfolio is low, and we are very cautious about that.
I think, Mr. Nangor, you're also saying that the cost of funds perhaps will inch up a little bit more, right, in the fourth quarter? But we heard from the RBI yesterday. I think there is a general realization that system interest rates perhaps will stay at these levels for longer. So no real cut or anything soon. So what's your assessment for the fourth quarter in terms of cost of funds and beyond?
The RBI's projection of inflation for next year is 90 bps lower. So I hope that may be an indication that the rates may not go up, and gradually the rates may come down. And our expectation about the borrowing rate going up maybe around 10-15% at the maximum. But being small ticket short-term lenders, it may not be difficult for us to pass on in the event of a need.
You mean 10-15 basis points, Mr. Nandakumar?
Maybe in the last quarter. That is the maximum expectation, if at all it happens. But yesterday's CNBC meeting used a lot of comfort, because the rates are kept stable there. But at the same time, the projection of inflation for FY25 is 90 bps lower. That means the indication may be the rates cooling down.
But all right, Mr. Nandakumar, the Ashirvad MFI IPO that's been put in abeyance by SEBI. Could you tell us what is the update out there, and when can we expect this IPO to hit the markets?
We expect that this is our expectation to take it by mid March or early April.
By mid-March or early April. Okay, that's so there has been progress that has been made there. Got it. Thanks for that clarification. Finally, any kind of growth outlook that you would have? I mean, for FY25, what are we staring at in terms of growth for the company?
So our expectation always remains about at the consolidated level at around 18 to 20%, and we hold that. Without
okay, 18 to 20%. And in the non-gold portfolio, what could the growth be?
Non-gold may be higher. Maybe we expect around 30% growth.
Okay, 30% growth in non-gold, and overall 18 to 20% growth is what you're looking at. All right, Mr. Nandakumar, we'll leave it at that. Thank you so much for joining us and speaking to CNBC TV18. Well, let's take a quick break on that note. The market is picking up actually. The Nifty is now up 60 points and led by a lot of individual stocks. Zomato is piling on the gains as we speak, 5% higher almost on Zomato. And from the frontliners, Reliance is doing a lot of the heavy lifting this morning. Let's take a quick break. On the other side, Sunita Reddy, the managing director of Apollo Hospitals, will join in to talk about their Q3 performance. Stay tuned.
HSBC presents CNBC TV18 Future Female Forward, the Women's Collective, powered by Parity. This February in New Delhi.
Welcome back. Well, the markets have moved into the green. We're up close to around 30 points approximately. And it's good to see that the Nifty bank is trying to fight its way back. So it's up close to around 200 points approximately, which is good news. Cummins had opened up in the red. That stock is moving to the green. So that's one of the bigger movers this morning. Earlier today, we had highlighted that on Concord, there is fresh long addition out there. And this fair bit of delivery-based buying. Yesterday as well, the stock was an outperformer. Today as well, it's up close to around 1.5%. So keep an eye out on that name. On the losing end, NBCC is giving up a goodish bit. Now that's down close to around 6% and it's falling on large volumes. So pull up NBCC. That stock should come up for you on the screen. IOC as well is down close to around 4%. Some of these OMCs after the big run, they are seeing some bit of selling. And I think PFC and REC, both of them seeing a lot of selling now. Both of them down between 5 to around 7% as we speak. And the volumes on both those two are quite large. So keep an eye out on both those two. Honeywell, that's another stock that's opened up in the green, I think reacting to its numbers. And AstraZeneca is a stock that's down, I think, close to around 10%. That's in reaction to its numbers as well. So that stock is well lower as we speak. But Concord, that's another name that we were highlighting in there. That's up close to around 1% yet again.
All right. That's the overall picture. We are up 20 points on the Nifty. So again, once again, no follow through, right? I mean, on the way down or on the way up, and we are in a range that's been very clear. Apollo Hospitals' third quarter earnings came in line with what the market was expecting. Margins are stable, hospital revenues have surged, while EBIT losses have narrowed for Apollo Health Co. Sunita Reddy is managing director at the company. She's joining us right now. to take some questions. Ma'am, great to have you with us here on CNBC TV18. Good morning, Prashant
Morning.
this side.
Good morning. Nice to be
I want to
here.
start good to have you, ma'am. Just a first question on Apollo Health Co. Could you give us the numbers for this quarter? And Apollo 24/7 as well. What was the performance on the operating side?
So Apollo Health Co did really well. We had a revenue of 2,087 crores, a growth of 17%. The vertical, which is the back-end pharmacy, did really well with 1,824 crores of revenue and a growth of 17%. Apollo Online did a revenue of 225 crores and again a growth of 27%. So there was strong online growth. We had 48,000 transactions per day happening and 2 million new users, taking the user base to 31 million. And in terms of EBITDA margin, offline had an EBITDA margin of 135 crores and online a loss of 132, but actually an EBITDA of 16 crores minus the ESOP charges, of which we took away 14 crores of ESOP charges, so net 2 crores of EBITDA.
All right. Hi, good morning, Ms. Reddy, and good to see you in. Nigel on this side. Couple of questions on Apollo Health Co itself. The GMV that you were guiding for earlier was around 2,800, 2,900 crores. Is that on track? And also on Apollo 24/7. For the last 18 months or so, we have been quizzing you. Is that fundraise, on the cards? You have a timeline out there?
We have, let me say there's no pressure. GMV came in at 658 crores. So we are actually ahead of guidance. And the fact that we broke even a quarter ahead of guidance, there is no pressure on cash flows. But we do have, like I said earlier, we have people interested in investing in Apollo Health Co. And at the appropriate time, of course, we'll come to the board and to our investors with the complete plan.
So anything in this calendar year that you're looking at?
This calendar year, well, there's a possibility, but like I said, at the appropriate time. But the most important thing to remember is that we're ahead of guidance and there's no pressure on cash flows, especially because we are now EBITDA neutral.
I think the reason my colleague was asking you about the margins is because if you track your overall margin picture, right, there's some amount of pressure that you're facing at about 12.9%. You used to enjoy 16, 17% margins as well. This could possibly be because of the cost pressures that you're seeing from Apollo 24/7. Do you get a sense that there could be some, pressure on margins because of that in the coming quarters? And if yes, what is the band that you're looking at?
No, so there will not be any cost pressure on the margins because as you've seen from the performance, we've actually rationalized costs to a huge extent. We've reduced discount, rationalized marketing cost and HR cost. So I think they have reached a very solid, they have reached steady state in terms of cost. There was a margin pressure on the hospital healthcare services this quarter, 94 basis points difference. And this is because, we've actually hired we've taken on doctors at guarantee money, which is a cost of 100 crores.
Okay. Ma'am, just sorry, one last question on the Apollo 24/7, the digital platform. So you've been investing heavily, right, in the business over the last many years. If you could just guide us to when is the final break-even? I mean, for example, last year, the FY23, the annual, there was a loss of about 650 crores. By when will we see a break-even for this business, ma'am?
And in 6 quarters, you'll see a complete break-even. You'll see profits.
6
and we're
quarters.
On track to deliver. Yes.
That'll be Q1 of
Q1 of
Q1 of FY26.
Yes.
Or Q2. Okay, the first half of FY26, basically.
Yes. The first quarter of FY26. First half of FY26.
Got that.
All right, Ms. Reddy, you also had done some acquisitions, 250-bed hospital, I think, in Pune, and a couple of others. How are they ramping up?
They are ramping up, so we're ready to open in FY25, 220 beds in Pune, 220 beds in Kolkata. and these will be ready. In addition to that, we're also looking at, we're looking at Gachibowli. So in FY25, we will open about 500 beds.
Oh, okay, got it. Also, I want to understand for the diagnostic business, right? What is the expectation as we move along? I mean, that business has been in an industry which has been seeing so much competition. Just trying to understand, is the worst over in terms of pricing pressure there, and what is the expectation over the next couple of quarters?
So the diagnostic business grew by 19%. Total revenue there of 111 crores, with AHLL revenues at 333 crores. And margins improved 10% in net margin for the diagnostic business. I think this has huge potential. And as Apollo is growing, as a network is growing larger, I think, there is the ability to become maybe the number 3 player in the diagnostic space. Margins will improve, especially because we're doing, we have invested into specialty diagnostics. So with this, we should get far better margins in the next year.
Okay. So can you tell me, in this quarter, in Q3, was it EBITDA positive? You said margins have improved, but I think last quarter EBITDA was about 32 crores. What has it been in this quarter?
So for the diagnostic business,
Yes.
we had 10% EBITDA margin.
Okay. And when do you plan to hit the top line of 500 crore revenue for this business?
We closed this quarter at 111. So close to, I think next quarter we should be close to 500 crores.
Next quarter you'll be at 500 crores, you said?
Yeah, for the total year.
For FY24?
Yeah.
Okay. All right, Ms. Reddy, we'll leave it at that. Thanks a lot for joining in and giving us your thoughts on the business as well as the way forward for the company. Well, let's move on. Asian Paints aims to become a 1 lakh crore revenue company in the next decade. These are the words coming in from company's MD and CEO, Amit Singhal, in a CNBC-TV18 exclusive conversation with my colleague Mangalam Malu. Mr. Singhal spoke about their growth outlook and opportunities in the home decor space. Listen in.
Last few years, we've really embarked in terms of giving the whole area of paint and coatings a very, very different kind of a zone, because we have started to kind of really look at saying that can we be part of the consumer decor life cycle.
You have waterproofing. What exactly is the total annual salience of waterproofing, and are you the biggest company right now when it comes to B2C waterproofing?
We got into the waterproofing zone because of the fact that we felt that customers were blaming everything on the paint, literally, and they did not know the knowledge of the substrate, which is so very critical in today's brick and mortar model which is there in India in terms of making homes. We've been now into waterproofing for the last about almost 8 years, and the journey has been explosive. We now are the #1 player in terms of the retail market. We've taken the whole positioning of being a lighthouse brand in terms of what we call as the smart care which is there. And we look at really providing solutions to the customer and taking the mantle of saying that you are the expert in waterproofing.
With the kind of balance sheet that you have, with the kind of brand power that you have, I'm sure there will be a lot more bigger inorganic opportunities in the home decor space.
Absolutely. So as we are looking at going ahead, we are looking at offering almost everything which really goes into a home to that extent. And as I speak, we've got into lighting, we've got into UPVC doors and windows, we've got into wooden flooring, kitchen and bath is already with us, we've got into fabrics and furnishings as I look at it. And therefore, as we kind of go ahead, we are always on the lookout in terms of saying that is there something which really synergizes in terms of our strategy, in terms of making it big to that extent.
In 3 or 4 years from now, if I had to look at your revenue mix, how much would come from the decorative paint? Of course, a large chunk would be there, but you have 8 to 10% coming in from home decor. You have industrial, you have international, any other areas that you're seeding? I mean, how does the revenue mix of Asian Paints look?
So as I see it today, global is close to about 8 to 10% of our overall category. Industrial is about 4 to 5%, and we think that industrial would kind of really grow to about 7 to 8% in terms of going ahead to that extent. Decor is the other one in terms of which keeps on growing. And if you look at all the adjacencies which are there, whether it is the whole area of waterproofing or it is the area of textures which we have kind of bought in, which is there. But I think one area which would be an outlier in everything would be the whole area of the whole service brand.
Yes, 650 cities is where you're at right now.
Yeah, so I think that's something which has been my personal kind of passion in a very strong way, because I think worldwide there was a challenge. When I used to speak to international paint companies, people used to say, service is not something which this industry is made for.
Numbers, joy and happiness is okay. Stock market wants numbers.
The number is 6 cities as we see it, okay.
Revenue?
In terms of the revenue, we can't kind of reveal the revenue in terms of what is it. But I can tell you that our endeavor is that the service brand should become almost 10% of the overall revenue of Asian Paints as we kind of go ahead.
Next decade, the last decade, you've grown sales at little around low teens. Profits have grown around mid-teens. Your stock price has grown at around 20%. The next decade, with all the opportunities that you're seeing, you foresee that to continue?
I don't think so. We should just look at the year which has kind of gone by. But I think the journey forward is still very, very strong in terms of what I see. And as we kind of go ahead, and look at the next kind of decade, I think as an organization, we would kind of look at numbers which could be closer to about anywhere between 11 and 12 billion in terms of going ahead to that extent. And it's not coming only from paints and coatings, it's coming from all the categories we have created, the industrial sales as I spoke of, the home decor, the global business and so on and so forth. So I think it's going to be a combination of all this in terms of what we see. And given the fact that India is a very strong market for us and the kind of growth which we envisage of the GDP going forward, I think this should be a reality.
So I got my headline. I mean, over the next decade, looking at a 1 lakh crore top line for Asian Paints. You've also gone on this big capex spree, which is part of it backward integration, part of it building more capacity. In terms of products, 12% of your new, revenue comes in from new innovative products. Promotions, you have said that you will increase your ad spends going forward. What does that mean in terms of quantitative benefits, in terms of margins, revenue, incremental, reach that you have? Give me numbers.
So, as I said, the area of new product and innovation, we have kind of done almost about 300 new products in the last about 7 years now, and they will continue to contribute to about 12 to 13% of our top line in terms of going forward. I think that is something which is a very, very strong source in terms of what we are bringing onto the table. We have looked at a lot of backward integration in terms of creating, capacities for something which possibly no competitor has done to that extent. So whether it is things like opacifiers, additives and so on and so forth, which are a big sum of our raw material buy, I think all these will definitely add to about 1.5% of our overall margins going up as we kind of look at future. The third area, I think we are looking at bringing more and more automation into the game in terms of how we can look at being the best CPT across the organizations, and looking at therefore bringing our overall area of overheads to an improvement of about 1 or 2% of the total overall sales in terms of what we do to that extent. And finally, the area of brand equity, where we feel that today we would like to kind of have a market share of or a mind share of more than 85% in terms of going forward to that extent, so that we can look at influencing not only the bottom of the pyramid, but look at influencing the luxury space in the India, as we see more disposable incomes happening, more affluent families happening to that extent in terms of going forward.
Would you let that flow into your margins, or your margins will still remain in that 18 to 20% band, and the remainder goes into brand building, like you said?
So we would largely say that we would kind of retain the same band, okay, and look at really investing these into core areas of the organization, which will always keep it leaping ahead.
Which is your favorite Asian Paints ad?
One which I'm very fond of is what I literally created along with Ogilvy, was the Har Ghar. Okay, Har Ghar with Piyush's magic and his voice still remains one of the most remembered ads, and I think it's propelling the brand really very strongly, because Har Ghar Kuch Kehta is the core of Asian Paints.
All right, a wholesome discussion there with Asian Paints. You can catch excerpts of that conversation all day today on CNBC TV18. But in the market, I just wanted to point out that there is a big sell-off in the broader markets. The mid-caps are under a lot of pressure. Almost 900 points gone on the mid-cap index, straight off the back. And all PSUs, we were telling you a while back that, PSUs is some money being taken off the table. Almost all PSUs are seeing some selling pressure right now. So just keep an eye out on that. But cement stocks are also in focus, Nigel?
Well, that's right. Ramco Cement, that's the one in focus. That's taken a bit of a knock. The reason is that the operational performance was weaker than expected. The sales volume, in fact, came in at around 4 million tons. We were working with a number of around 4.2 million tons. And the EBITDA number as well was a miss of close to around 10 to around 12% in comparison to our poll. Besides that, they went ahead and they've announced a capex plan of around 1,700 crores. This is, they're already sitting on a debt of close to around, of around 5,000 crores. So because of that, the street is a little bit nervous that the operational performance is a little bit weak. Debt continues to remain elevated. And also they've gone ahead and announced a capex plan. Explains why the stock is under